Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Silver is wealth. Silver is real value. Value that cannot be created nor destroyed, like the dollar. Fiat currency has lost 98% of its purchasing power due to hyperinflation, and it's not going to last too much longer. Our financial system is crashing. We're $24 trillion in debt. We're trying to pump all this worthless money oversaturating the markets, and it's not working. So gold and silver are the only answer. And this article is talking about, in a wild market, there is logic in gold. Gold and silver make sense, and especially from this guy's perspective, he talks about the physical metal, the physical aspect that gold and silver brings. So it's been a wild week in the commodity markets. The uncertainty over the global economy and continues. The need for stimulus grows exponentially with time, and gold is building strength for higher highs. So markets across all asset classes continue to experience a period where old assumptions are out the window. Risk has taken on a new dimension as the world continues to face a global pandemic. The stock market crashed in 1987, the tech bubble around the turn of the century, and the 2008 global financial crisis all pale in comparison to the current environment. So, we've seen similar situations to this before, but right now things are much, much crazier. The virus does not discriminate based on borders, as the microscopic virus is the enemy of all people across the globe. The impact on financial markets is the symptom of the health crisis. Social distancing guidelines have put the U.S., European, and global economies into a self-induced coma. Governments have been buying time to slow the spread of the virus while scientists scramble to find an effective therapy and vaccine. The costs are staggering, and they continue to grow. The cost of stimulus programs is weighing on the value of currencies around the world. The U.S. dollar, the reserve currency of the world, has gained against and other foreign exchange instruments. However, all fiat currencies that derive their value from full faith and credit governments that issue legal tender are declining as an asset class under the weight of the unprecedented levels of monetary and fiscal stimulus. Like I was mentioning earlier in the video, anything that's pegged to faith and credit is going to fall. Gold was already in a bull market when this virus began spreading around the world. Governments can increase the money supply at will, but they can only increase the supply of gold by extracting more of the yellow metal out of the Earth's crust. That's what gives it real value. Central banks can validate the role of gold in the global financial system as they hold precious metals as an integral part of their foreign currency reserves. The Velocity 3x Long Gold ETF, or ETN, is a short-term tool that magnifies the price performance of gold on the upside. A wild week in the commodity markets. While gold is a financial asset, the metal is also a commodity. Commodities tend to experience higher levels of volatility than other asset classes. The price ranges in raw materials are significantly higher than stocks, bonds, and currencies over time. Last week, the price of crude oil traded to its lowest price in modern history. Moreover, the price of energy commodity moved below zero for the first time since trading on the NYMEX division of the CME that began in the 1980s. The quarterly chart of the NYMEX crude oil shows the price fell below the 1986 bottom of $9.75 a barrel like a hot knife goes through butter during the week of April 20th. The price reached a low of negative $40.32 per barrel as long as nowhere to store energy had to store their commodity. They had nowhere to put it. Many market participants believed that a zero price was the ultimate bottom, but they turned out to be tragically wrong. We have witnessed wide price ranges in a host of commodities, with many falling to multi-year lows because of the deflationary spiral caused by the variety of reasons by the back of the virus. Crude oil and copper declined on the back of falling demand. Meat prices fell because of bottlenecks in the supply chain. Pressure in beef and pork futures came from growing supplies at times when processing plants have closed because of the outbreak of the virus. Even though the wholesale prices of meats have fallen to bargain basement levels, shortages are developing because of the decline in processing. In oil, gasoline prices at the pump have not kept pace with the decrease in the price of oil. Even though gasoline inventories have increased dramatically, rising costs and supply chain prices for consumers have not declined to the same extent as gasoline futures or oil futures. So price volatility across all asset classes has been the hallmark of this virus's impact on markets, and that is likely to continue. Gold has been in a bull market since June 2019, when the price broke out to the upside above its resistance at $1,377 per ounce. The bull market in gold began in the early 2000s. The move last June was just the next leg higher. Gold was trading at the near $1,730 per ounce level on the nearby June futures contract at the end of last week, but the road higher has not been a straight line. So here's the uncertainty over global economy that continues. Markets move in the blink of an eye. At the same time, the virus continues to infect people as it spreads like wildfire. Unfortunately, scientific progress in finding an effective treatment moves far slower. The timeline between markets, the virus, science is the root of the cause, the continuation in the environment, and uncertainty in markets. Markets face two issues during the current crisis. Market volatility has created choppy price action during a deflationary spiral. The unique factor is that scientific progress that is the remedy for volatility moves far slower pace than the spread of the virus is creating price variance. Last week, the price of June crude oil futures traded in the range from $6.50 to $24 per barrel. Gold's trading band was $1,666 to $1,764. Uncertainty creates vast ranges that are likely to continue over the coming weeks and perhaps months. So, the need for stimulus grows exponentially with time. The U.S. Fed, European central banks have pledged they stand ready to do anything and everything to stabilize the economy during this challenging period in history. So far, trillions of dollars of stimulus from central banks have been necessary. At the same time, fiscal programs to offset the effect of rising unemployment and business closures have added to the price tag for this virus. The bottom line is that the tidal wave of cash is bearish for foreign exchange markets. The dilutive impact of the currency markets is unprecedented. The longer the virus causes a self-induced coma in economies, the more stimulus will be necessary. Even if certain parts of the economy begin to operate slowly, the stimulus will continue for others. At the same time, the sudden halt to business activity and the changes in behavior caused by the pandemic will require elevated levels of stimulus far into the future. Stimulus amounts to printing more fiat currencies, which will continue to dilute the value of the U.S. dollar, euros, yen, and all world currencies. As the currency values decline, one exchange instrument that cannot suffer dilution is likely to appreciate. Gold is not the king of currencies, it is the monarch of all money. See, this is why gold has so much potential. As everything else is falling, gold and silver look like they're going to be rising. Gold is building strength for higher highs. A bull market in gold in the current environment is not rocket science, it is logic. The trend is higher, and the stimulus is the rocket fuel that will continue to accelerate the current price pattern. Gold has risen to a new all-time highs in almost every currency in the world over the past months. The last shoe to drop was the Swiss franc, which traded to a new low against the gold this month. The lone currency that has not traded lower is the U.S. dollar, but eventually will likely to occur sooner than later. So, the rally from 2001 through 2011 took gold to a low of $255 to a high of $1,920, over 7.5 times higher. A similar move from the 2015 low of $1,046 would take the yellow metal to $7,800 per ounce. As a commodities trader, I have learned never to say never when it comes to the potential for a market. Most market participants never believed that crude oil would trade below zero before last week. It moved to over a negative $40 per barrel. Before the outbreak of this virus, Citigroup analysts projected that gold would reach $2,000 per ounce in 2021. Bank of America is looking for $3,000. The stimulus not only increases the odds that the ascent will reach that level sooner than next year, but the price will move a lot higher than Citigroup's and Bank of America's targets. I believe that the current rally will reach at least $3,000 per ounce. Do not discount the potential for even a higher price level, perhaps double that level before gold reaches a peak. So, gold does not tend to move higher in a straight line. There have been plenty of pullbacks that have been golden buying opportunities since 2018. And this is true, right? There's going to be dips, there's going to be sell-offs, there's going to be corrections. And that's just opportunity. That's just opportunity to buy, right? Just to get it for cheaper one last time. So you never want to use those as panic selling, mind states. That's just the fear in the economy, the economic turmoil that doomsday apocalyptic mind state that you don't want to have. So anyways, I'm going to wrap this video up here. I thought this was a great article that explained a lot about gold and silver, a lot about the economy, a lot about the dollar, fiat currency, and where it's headed. And if you are looking for the future, if you're looking at things realistically, then gold and silver is definitely the answer. So anyways, I'm going to wrap this video up here. Make sure to smash the like button. I posted 3 other videos today, so make sure you go check those out as well. Definitely some good stuff. If you haven't already seen, I did the giveaway for my 26,000 subscriber drawing, so go check that video out to see if you won. I just posted that a couple hours ago. Thanks for tuning in. This was Silver Slayer. Make sure to smash the like button. I'm out. Peace.